Hey, how's it going? Welcome back to the channel. Today, I want to dive into an important topic, a new paradigm we're stepping into as XRP investors. It's a seasonal reality that's likely to shape the crypto landscape over the next few months. But don't worry, there are a few potential disruptors that could reshape this outlook. And that's exactly what we're going to unpack. Now, quick side note. If you're noticing all these balloons behind me, we recently hosted a baby shower at our home. My niece is expecting her first child, and my wife went all out with the decorations, hence the festive background. But let's get back to XRP. I posted a video yesterday, and I believe this will become a recurring theme in my upcoming content, simply because not all of you catch every video, and this message is crucial. As we step into the summer, it's May 13th at the time of this recording. You should be aware of a historically consistent trend. Summers are notoriously sluggish in the crypto space. June, July, and early August are often marked by low volatility and limited momentum. You've probably heard the saying, sell in May and go away. Well, it tends to apply here too. I've been doing this for years, both as an investor and a content creator, and I've seen this cycle play out time and again. So yes, the pace is going to slow down. That's our current reality as XRP holders. However, there are a few key X factors that could shift this trajectory. A resurgence of retail investment capital. A significant influx of institutional funds. Major catalysts, such as an XRP ETF approval, XRP being added to a U.S. strategic reserve, or a groundbreaking announcement related to global trade agreements. Now, the US-China trade war was recently declared resolved, and interestingly, it had virtually no impact on crypto markets. So while macroeconomic developments are worth monitoring, they're not guaranteed triggers. That said, the most important takeaway is this: you need to mentally and emotionally prepare for a slower season. Don't let boredom, price stagnation, or lack of hype push you out of the game prematurely. Because come Q4 of 2025, things could get explosively bullish. We will still see some spikes, like yesterday for example when XRP surged over 12% and outperformed the broader market. But today it's down around 2%. That kind of fluctuation is likely to become the norm during this period. I just want to keep you grounded and informed. Now, if you're looking for an edge in your trading journey, I highly recommend checking out my tool X1 Algo, a powerful software solution designed to help you optimize your crypto and stock trades. Here's what it's been flagging lately. XRP. It issued a buy alert 5-6 days ago. We're now up 20%. Ethereum. A buy alert was triggered 17 days ago, up over 60%. Onyx Coin issued a signal weeks ago, and it rallied 700% in just 70 days. A $1,000 investment would have netted you $7,000. Just like that. What would that kind of extra income do for your life? And more importantly, what if you could time both your buys and sells with precision? That's what most traders miss. They don't have a strategy. They guess. They hold. They hope. But this is about data-driven execution. The software works for stocks too. And here's the kicker. It costs just $1.15 per day. That's less than a coffee. And there's a 30-day no questions asked money-back guarantee. Try it risk-free. If you don't like it, get your money back. The link is below. You'll see it labeled as X1 Algo Trading. There's also a discount code to get it at the lowest price I've ever offered. And just a heads up, I'm considering raising the price soon. So if you want in at this discounted rate, this is your window. More videos coming your way. Stay tuned. Thanks for watching. The world of finance is on the cusp of a revolution, and at the heart of this transformation lies XRP. As traditional financial systems grapple with inefficiencies, XRP emerges as a beacon of innovation, promising faster, cheaper, and more transparent cross-border transactions. This digital asset has captured the attention of investors and institutions alike, signaling a potential paradigm shift in how we move value across borders. XRP's surge in popularity is not merely hype, it's backed by tangible utility. Unlike other cryptocurrencies designed primarily for speculation, XRP is engineered for real-world applications, particularly in international settlements. This focus on solving a tangible problem within a multi-trillion-dollar market has positioned XRP as a frontrunner in the race for mainstream adoption. The financial world is taking notice. Major players in the payments industry are partnering with Ripple, the company behind XRP, to leverage its technology for faster and more cost-effective cross-border payments. This growing adoption by established institutions adds weight to XRP's potential and fuels the excitement surrounding its future prospects. Recent market activity has sent shockwaves through the cryptosphere, with XRP experiencing a dramatic surge in value. This exponential growth has been linked to a phenomenon known as the multiplier effect, a term that has ignited both excitement and speculation among investors. The multiplier effect refers to the disproportionate impact that inflows can have on XRP's price. To illustrate, a relatively small inflow of $61 million recently resulted in a staggering $16.6 billion surge in XRP's market cap, representing an unprecedented 272 times multiplier. This extraordinary leverage effect has become a focal point of discussion, prompting analysts and enthusiasts to ponder its implications for XRP's future price trajectory. If such a small inflow can trigger such a dramatic price increase, what could larger inflows mean for early investors? While the 272 times multiplier is an undeniably enticing prospect, it's crucial to approach such figures with a healthy dose of caution. Market dynamics are inherently volatile, and past performance is not always indicative of future results. Nevertheless, the multiplier effect has undoubtedly captured the imagination of the crypto community, fueling speculation and anticipation for what lies ahead. The recent demonstration of XRP's multiplier effect has opened the floodgates of speculation, with analysts and enthusiasts alike attempting to predict the digital asset's future price based on various inflow scenarios. While such projections are inherently speculative, they offer a glimpse into the potential magnitude of XRP's future growth. One scenario that has gained considerable traction is the hypothetical approval of a spot XRP ETF, or exchange-traded fund. ETFs provide a regulated and accessible avenue for institutional and retail investors to gain exposure to an asset class, and the introduction of a spot XRP ETF could unlock billions, if not trillions, of dollars in new capital. Applying the observed 272 times multiplier to a hypothetical $20 billion inflow, which could be possible with a spot XRP ETF, suggests a potential XRP price target of $93. This figure, while astonishing, pales in comparison to the potential price appreciation if $1 trillion were to flow into XRP. While these projections are based on a specific multiplier that may not hold constant in all market conditions, they underscore the sheer magnitude of XRP's upside potential. The prospect of such monumental gains has captivated the attention of investors worldwide, further solidifying XRP's position as a leading contender in the rapidly evolving landscape of digital assets. Section 4. Trump's bullish stance, a catalyst for crypto growth. The political landscape often casts a long shadow over the financial markets, and the cryptocurrency sector is no exception. The recent bullish remarks from former President Donald Trump regarding the American market have sparked intrigue and speculation within the crypto community, particularly among those invested in Ripple's XRP. Trump, known for his pro-business stance and penchant for deregulation, has repeatedly expressed optimism about the U.S. economy's growth potential. His administration has championed policies aimed at fostering innovation and attracting investment, a stance that could potentially benefit the burgeoning cryptocurrency industry. While Trump has not specifically addressed cryptocurrency regulations, his administration's broader pro-business approach suggests a potential softening of the regulatory stance towards digital assets. This possibility has been further fueled by reports of Ripple engaging in discussions with government officials, hinting at a potential shift in the regulatory landscape. The cryptocurrency industry has long grappled with regulatory uncertainty, which has hampered its growth and inhibited wider adoption. A more favorable regulatory environment, potentially spurred by Trump's pro-business policies, could unleash a wave of innovation and investment in the sector, propelling cryptocurrencies like XRP to new heights. Section 5. The SEC conundrum navigating the regulatory landscape. The world of cryptocurrency exists in a regulatory gray area, often caught between innovation and the need for investor protection. Nowhere is this tension more apparent than in the United States, where the Securities and Exchange Commission, or SEC, grapples with how to classify and regulate digital assets. This regulatory uncertainty poses both challenges and opportunities for cryptocurrencies like XRP. On the one hand, the lack of clear guidelines has created a sense of unease among some investors who are wary of potential regulatory crackdowns or sudden shifts in policy. This ambiguity can stifle investment and innovation, as companies operating in the crypto space navigate a complex and constantly evolving legal landscape. On the other hand, the SEC's cautious approach also presents an opportunity for the U.S. to establish itself as a leader in responsible crypto regulation. By fostering a transparent and predictable regulatory environment, the U.S. can attract investment, foster innovation, and ensure that the transformative potential of blockchain technology is harnessed safely and responsibly. Key figures within the SEC, including Commissioners Hester Peirce and Paul Atkins, have advocated for a balanced approach to crypto regulation, emphasizing the need for clarity and consistency. Their calls for a more nuanced regulatory framework, one that recognizes the unique characteristics of digital assets, offer a glimmer of hope for the crypto industry, signaling a potential shift towards a more supportive and enabling regulatory environment.